How's it going, everybody? Now at the close, we are having a lot of news. By the way, just to let you know, one of the most important anyway, it's about the J.P. Morgan. Well, most of the bank sector. Uh, we had some news, and let me tell you. First of all, we're going there because uh, Morgan Stanley. First of all, before anything, you gotta know that at the end of the day, we had the news about the about Robinhood, which is supposedly Bankman Freight's FTX say to be seeking path for Robinhood deal. And this morning also on Traders on the Squawk, we spent a little bit of time talking about this and saying about the Goldman Sachs upgraded the stock to neutral from sale. And not being funny, but that's something that it was pretty easy to think that it will go obviously to the nine. But then let me tell you, because it went to the nine, actually knocked the 9.72, and Goldman Sachs upgraded to neutral from sell with a price target of 9.5. And the previous one, last time, the target they had was 11.5. Obviously, the entire day, the stock was trading like around between 7.82 and the 8, 8 and 8, 40, 41, 45. And that was exactly the point where this news was coming out, saying supposedly that it was just in a squawk, obviously, right? But Bankman Freight's FTX say to be seeking path for Robinhood deal. So obviously, so much volatility that at the end of the day, Robinhood shares was completely halted due obviously to the volatility, the high volatility. But then just as long as the market closes, right, we had the news about that. It was like no. FTX CEO Sam Bankman Fried denied the talks with Robinhood. This is actually the source of Dow Jones, but Dow Jones literally say that we received the email from the FTX CEO Sam Bankman-Fried, who was denying the talks with Robinhood. So if we go right away now to the Robinhood, you will realize that it was knocking the nine pretty good. Then if we go to the daily chart, by the way, you will realize what we are talking. And this is pretty awesome because now after hour you will realize that it's trading around the $8. The post market is 8.73, which is not a bad price after all, considering that Goldman Sachs is considering around 9, right? Actually, to be precise, 9.72, right? Sorry, 9.5, right? So, and the price knocked the 9.72. So, it was pretty funny though. But then it came obviously the other news about, and I'm going to show you right away, about the bank sector. And that's why I was on JP Morgan, because JP Morgan was saying something very natural in one way to see it, right? Talking first of all, and I'm gonna show you right here, but give me a sec. I don't know what's going on with this mic. Moving it a bit and then it's just completely loose. Well, then we have JP Morgan, and what JP Morgan said. First of all, Morgan Stanley was reporting 20 billion common equity share buyback program, boosting their dividend to 0.775 per share, right? So let me go to let me just read off Netflix because it's completely useless, right? Let me go through. Yeah, there it is. Morgan Stanley. Then, so you will realize that Morgan Stanley was reporting 20 billion um, common equity share buyback program, boosting their dividend to 0.775 per share. So you will realize that instantly post market from the $77 with 44 cents then went up to $78 with 70 cents. Anyway, if you're looking at my chart at this moment, you'll realize that anyway, it's still below the 200 daily moving average. So be careful anyway. It doesn't mean that it will go heavily up, right? But anyway, we are having a channel over here, and let me show you then, because there's a downside channel that it doesn't look good at all, right? There it is. So it's a kind of perfect one. I'm not sure that, that if you it will give you the right opportunity to buy, but obviously at the moment it doesn't look bad at all, as long as the 200 daily moving average is not so far away. I mean, around 20, less of $20. So let me go over here. Let me see if we can find any. No, there's a problem over here. No, completely invalidated a trade. If you're thinking to get in, I do not recommend to do something like that. So forget about that. Not a buying opportunity. So in that way, you will be buying the dip, the well-known buying the dip. So maybe not a good trade to make after all. And if you want to risk, well, then you have to place your stop loss below the $72, and then not a bad deal if that's going to 93. Well, that's Morgan Stanley. So now let me go to Bank of America, because Bank of America at the same time was aftermarket. Most of the news in the financial sector came out after the close. And let me tell you, because Bank of America, they say that they're planning to boost its quarterly dividends to 0.22 cents. So let me go. This is the daily chart, right? Closed at $32 with 35 cents. Then it went up in post market at $32 with 41 cents. And then if we go to the daily chart, you will realize that it's already above the daily moving average. Is it really a good trade to make? Well, that depends on you, right? But then you have to think about a little bit this. If we move to the daily chart, there is still in that very similar channel of the Morgan Stanley, and it's below, quite below the 200 daily moving average. But this way, it's a little bit different, because you have like around just $10 difference between the price, the current price, and then the 200 day moving average. So there's still some opportunity, maybe. Yeah, it might be. But then again, you have to buy the dip. So, and it's not probably one of the greatest trade that you will make. So just be careful with that. And anyway, that was Bank of America. And well, because Bank of America plans to boost its quarterly dividends to 22 cents per share, then JP Morgan, and let me go back to JP Morgan to this is the daily chart. There it is. Sorry, this is the intraday chart. So JP Morgan said is set to maintain dividend at $1 for the third quarter stock dividend to 0.775 per share. Let me tell you again, the JP Morgan, right? They said that first of all, they are looking to maintain dividend at $1 per share for the third quarter. That's pretty good, right? They are going to maintain that dividend, so it looks all right, not a massive problem, so it's okay. But then also JP Morgan, right, says that to intending to maintain that current quarterly common stock dividend of $1 a share for the third quarter in 22, in light of higher future capital requirements. There are some higher future capital requirements, so be careful with that, right? So anyway, after that, the price already closed at $116 dollars with 40 cents, and then it went just only 24 cents up in the post market. So, but anyway, JP Morgan, it looks, if we go to the daily chart, let me go there. It's a very similar thing, and that's why it's so complicated to take a decision with all of them, because they're moving very similar, and that means that if you're buying or buying just JP Morgan, Bank of America, and Morgan Stanley, then you could have exactly the same problem, right? So be careful with that. Then let me go over here, and you will realize. Oh no, let me just change this. I don't know why did I put that crap. Then yeah, there it is. We have the channel, right? A very similar thing, moving quite similar to Morgan Stanley, quite similar to Bank of America. So not a bad deal after all, right? Then we have some news from Goldman Sachs, because, well, Goldman Sachs firm's capital plan includes an increase in common stock dividend from $2 to 2.5 per share, and the estimated it was 2.25. So be careful with that. We're gonna go there right away to Goldman Sachs. So let me go here. Yes. So Goldman Sachs is saying now, again, a very similar chart with the other financials. So then you will realize that it's still there. We're still in a downtrend, and we're still into that channel, parallel channel. So you will realize that Goldman Sachs, the firm's capital plan, includes an increase in common stock dividend from $2 to 2.5 per share, and the estimated is 2.25. So anyway, pretty good, right? Now let's go with something else that I'm gonna show you, and that's Wells Fargo. Can you believe that? So Wells Fargo said right now, just minutes ago, Wells Fargo said the company expects to increase its third quarter this year, 22, common stock dividend to 0.30. That means 30 cents per share from 25 per share. Then, so you will realize this not exactly the symbol of movement, but anyway, it's still there, right? So then you can realize over here we have the Wells Fargo saying that they are expecting to increase its third quarter 22 common stock dividend to 0.30 per share from 0.25 per share, which is not a bad deal, right? But then you have to know that, again, it's coming complicated, right? Why is so important, obviously, this dividend anyway? Because you have to think exactly as the investor. The investor is not holding actually the share of a bank or any stock because, oh yeah, this is going just up. No, it means because of the dividend, right? Because it's giving you the right to have that dividend, to perceive that dividend. So in that way, for the big investor, it's pretty good, right? But then also it's giving you a glimpse about, be careful with this, because as long as we're seeing a kind of recession anyway, then they will cut that price, right? That kind of dividend. So that amount, it could be reduced, and then it will be hardened, obviously, the investor. So then the investor could probably just say, I'm off, right? So be careful with that. Then what else we have for just a news that it's coming out anyway. Moody's says on the U.S. housing market, they are expecting now the new home construction to remain stronger than before 2020. Probably, yeah, because more people now is looking for a house, right? Because obviously the interest rate is just going up, and they are raising their interest rate, and we know now that it's not going to be just 0.5, right? Now it's going to be 0.75, like the last time Jerome Powell said. So, in that perspective, if the housing market is just accelerating, then you will realize that there is, at the end of the day, um, producing or generating more inflation, right? Because then, well, there's a very good article that we already posted last week, and it was about what no, I don't remember. It was a Wall Street journal, or it was Bloomberg. Don't know, can't remember. But it was something like the housing market now is seeing how the prices are going so badly because they are rising so fast, right? Then the problem is, for example, it was a very clear case about this, and it was a house was, well, obviously it had a price, right? Let's say price X, let's say 500, but then they had 16 offers at the same time. 16 different people making an offer for the same house. Not so happy with it, right? Because probably the owners, they were so happy, right? But not just that. At the same time, because of that, the amount of people making that offer, then they just pushing obviously the price higher. So in that perspective, is so complicated to realize what really is going on with the housing market that probably it will knock to us very, very hard. So, well, anyway, after this, the Wells Fargo, right? We're going through the next one. Well, no, I've already said about the Robinhood, so it doesn't matter, not much at all. And let me tell you anyway, because the U.S. market, well, you already know. Sorry, already closed. The Dow Jones closed in negative territory with 0.20% down. Let me go there to see what's going on. Not a big deal anyway, right? This is the 4-hour chart. I don't know why. Usually work with the daily chart. So in this case, you will realize that the Dow Jones already closed at 31,438, and then it's preparing. Yeah, it's down, right? It's a negative. It's in red. But then it's not about at all because it could go higher. Where it could go at least to the 31,939, right? But then you have to be careful because it could go even lower then, right? So Dow Jones closing with 31,438, 0.20% down. Let me go through the S&P 500. S&P 500 doing a very similar thing, closing at 3,900, and you will realize that it's making a very similar movement. Now, in this perspective, it's a little bit different compared with the Dow Jones, because after all, we had this tiny red line over here that it's around the 4,013, 18 or something like that. So if today closed 0.3%, 0.30% down, the S&P 500, then you have to realize that it could come around this area of the red line, which is a very key level after all to jump in, or in your case, probably to take a short position. Well, that's it. The most important indexes in the US. So let me go then to the Nasdaq, and Nasdaq closed with 0.72% down. This is represented by 11,534. 24. My yellow line is actually to the at the 11,534, right? So it's very nice to see how the price is going to my lines, because that means that it's doing exactly what I'm expecting, right? So in that way, you will realize the Nasdaq, it could go a little bit lower in this case, probably around this blue line that it's around the 11,241, but then it has a lot of potential to go a little bit higher. Be careful anyway, because this is the 1 hour chart. So let me go through the 1 day chart, and it's exactly at the same level, so be careful with that. But anyway, it's giving you an idea about what it could do. Anyway, if this is going up, look, I'm gonna just make an assume. There it is. So then be careful, because the Nasdaq, what it could do, it's coming to this blue line, but then if it is not, and it's trying to be held by this yellow line at 11,534, then it's telling you that it could go then to the 13,234. So it's not a bad price after all. But then again, look, anyway, this is the daily chart, and this is way below the 200 daily moving average. So be careful anyway. It's too far away, and it could represent a very big sell-off for the Nasdaq. So be careful with that anyway. So let me go through the next one. I'm going to the dollar index. Why am I going to the dollar index? First of all, let me go through to the daily chart, and you will realize that instantly the daily chart is so nice to see, because I have my line over here around the 103.047, and then it's one of my levels or crucial level to me, because it could do something like this. Let me show you. Rejecting a bit, but not so far, so be careful with that. I'm not expecting it to go so far. And then if it crosses and closes below this key line, then it could go a little bit further, and that means lower around the 103.47, 100.347. So be careful with that after all, because it's going to be complicated if you are trading against the dollar, or if you're going to trade with the dollar. So that's the dollar index, which is the most important to me up to now, because what am I seeing is, and I've told you this a long time ago, about, look, these levels to me are signaling just only one thing, and this is a drop, nothing else than that, right? Just consider this, that we just crossed one of this level around the 102, or well, it might be even to the 103, very similar to the other line or previous line that I've showed you earlier. So be careful with this. Look, this is a very, very crucial level to me, and it could go a little bit higher. Yeah, it could be, but then it could be like a kind of Armageddon or something, because then if it is going just up and up and up, as higher is going, lower than is going. So simple as that. So anyway, this is going a little bit nice to that way. Perfect. So let me go through the next one, which is I do love now. I'm gonna do it over here because this is no longer 16. Didi, just forget about that. Let me go through the. Come on, get a grip. So there it is. We have the gold, and you will realize that gold is doing something quite nice. Look at this. Let me show you. This is the daily chart, by the way, below the 200 daily moving average, but the 200 daily moving average is still pointing up, right? So it looks pretty nice. And at the same time, we have this key level around the 1,826. That's a very key level to me, right? And it was already violated, right? It went up, but then went down, and three times. So that means that it could go even lower. But again, be careful with this, because we have this very tiny line right over here, which is not a bad thing after all, right? But then we have something else that it could see something like this going down, crossing this yellow line. I do not see the other. Uh, Here it is. So it could come obviously to this level and then pushing it up, or then just falling and dropping. But then if it drops, then be careful because this could come around this level, the 1753, right? 1753. That's another level that I want to see anyway, because it means that, well, you can get a better price, right? So not a bad deal after all. Then let me go through the the US oil. The WTI currently trading at 109, right? Then you will see how my lines are working after all. Take a look at this, and then let me go the 4 hours. Yeah, maybe. Right. So with the 4 hours, look, I have my lines over here. I always try to keep my lines, by the way. If this is just your first time watching a video like this, you will realize that every single time that I'm trading, or I'm just showing you a chart, you will see too many lines, because I do love to keep my lines, my own lines. First of all, because it's showing me the previous key levels that I already made, and then because it's signaling if I'm right or wrong, right? And that's why I do prefer to keep my lines and then show, try to be transparent at the same time, right? That I'm wrong, yeah, it's still fine. I'm okay, right? This is training, so obviously you're not 100% of the time you're right. Hmm? You're gonna be making very good trades and very bad trades, right? The thing is, and this is the key actually for trading, if you're gonna lose, you're gonna lose just a few, and then if you're gonna win, then you're gonna make a massive profit. That's the idea, right? So that's why I do prefer to give my lines, and you will realize that now that the 4 hour charts is signaling that the price is still below the 200-day moving average. But anyway, it went exactly where I wanted to see it, and that was, let me just show you over here to this key level, exactly here to 103. So then it's telling me that, yeah, man, I'm fully willing and able to go then to the new level. What that new level is, because already crossed the 109.80, sorry, 0.81, right? Then it will go through the 200-day moving average, and then probably, and I'm gonna make a brand new line that you will see why am I doing this, then around here. This is another level to me that it's gonna tell me that I'm wrong or not, but probably I'm gonna be absolutely right. Why? Because there's the pressure is so high, right? We are seeing too many things happening at the same time, and currently this time is showing you that it's not okay, that it's not fine, right? We are so close to a recession that it means, oh well, yeah, maybe then the projection will be just, if it will be less, so then, well, it should be cheaper. But at the same time, we have a geopolitical risk, and we have, well, not allies, but we have other countries that they can control that, and not us, right? So anyway, the thing is that because already crossed that level of around the 109.81, then it means that it could go to the next level, which is 116. That's the US oil. Don't know what else. Oh yeah, let me show you then the dollar CAD. If you're keen on the forex market, forex market already went heavily heavily down, right? Sorry, over here to the daily chart. If we go to the, come on, man, show me then, yeah, year to date, and then you will see how it's doing this pair. After all, already closed my key lines, which is okay. I'm not wrong with that. Nothing's wrong with that. But the thing is that because remember the dollar index, let's go again. If dollar index, what do you think is doing now? What do you think it is going now? Everything is pointing down, right? So dollar CAD it should go a little bit down. Well, sorry, the Canadian dollar it should go up. So that means that the dollar CAD pair in the forex market it should go then lower, right? That means that it could go to the 1.27. Yeah, it could go there. So just keep in mind that we have another key level anyway over here. That's it. So 1.28, that's another target that you have. So if you want to trade it, there it is. So let me go then to the dollar yen, because this is exactly what one of my best trades ever that I shared publicly, openly, widely traded by most of you probably, and you will realize that I've told you you have to buy dollar yen. Well, not you don't have to buy, but then I've told you it could be very good trade to buy, right? And this is exactly what I did. Why? Because I've told you at that time when the price was around the 133, then I've told you why not go into 134, why not going to 135, and why not going to 136, which is to me it looks like more. It's like a key level in the long run, right? But then be careful, because if things are getting awful, this level it could be absolutely missed, and that probably it's gonna happen if we have bad news next week, or well, for example, with the non-farm payroll struggling, or now if the inflation the next inflation data it's pretty awful. So then it will go much lower than because, well, that just try to keep in mind my target for this is below 100. Yeah. So you know what I mean. Okay, well, anyway, that's the dollar yen. So let me go to another one, which is pound. If you're working on the pound dollar, let me go through the chart and look at this. This is the daily chart, and then a very key level to me, but it's struggling, so be careful. It's in a very shippy mode, so I'm not sure if you are able to trade, or if you know what you're doing, fine. If you don't, well, just try to avoid it. But this is looking up pretty good to me to say, please pick me up, buy. To me it sounds more likely, right? So just keep in mind that because that's probably it's going to happen pretty soon. Then if you are seeing this video then and you want to see if I'm wrong, then I'm going to put this line over here. I'm going to put it on with red. Yeah, that's going to be red color. So if it's go down, well, I'm off, right? I'm going to retire that. Then let me go through the over here, the one of the last one, euro dollar, that I'm keen on. No longer on the other pairs, by the way. Here it is. It is a very good one, by the way. You have a very nice uptrend over here, and then you have this, which is absolutely awesome, because if you, oh sorry, no, not this one, not horizontal line. This horizontal rate is showing me that it's still there. There's still option. There is still an opportunity to go higher. So be careful with this. This could go a little bit higher, and that's not a problem. For example, if it is coming around this area around here, and then do not be afraid if you're seeing the price coming to this line around the 1.04, right? Now, be careful, because just to let you know, remember that the big ones, the big players, big banks, they already said that they are seeing the euro dollar going to 101, right? So that means that we can see another drop, right? And that's a very similar thing with the pound. It could go obviously to that price. Why? Because that could happen before the massive drop of the dollar, right? So the dollar still have room to go a little bit up. The dollar, not this pair, dollar, right? Then, as long as we are going to the one to one, then well, it could happen anything. Right, so that's it. Let me just check what probably it happened before earlier, because this morning on Traders on the Squawk we had too many upgradings. So let me go through the upgrades then. Is this one or is this one? Let me just pick. I'm gonna pick this one. Oh, by the way, the 10-year yield. If you're working on it, just in case, let me tell you that this today the 10-year yield is currently at 3.202. I'm gonna repeat it, 3.202, right? And by the way, just be careful because Citi plans to maintain current common dividend of 0.51 a share in the third quarter. So let me just give you a glimpse anyway. We have, first of all, Citi. Let me go through these. Well, Twitter. I'm gonna remove Twitter then, and let me go to Citi, and then you will see how is really doing. Citigroup, currently at $47.83. They are planning to maintain current common dividend of 0.51 a share in the third quarter, right? Let me just. I'm gonna type it over here because that's something that I have to keep in mind. Citi plans then to maintain current common dividend. There it is. Of 0.51% share. So then, well, obviously now you're not able to do anything, right? But then you will realize that this is the intraday chart. So let me go then to the daily chart. The daily chart, look, is just telling me that it could go then to the 50. That's it. That's it. Yeah. That's it. So then you will realize that the price, it's very, very under the sun. 45. So then you have to literally place your stop loss below that price, below the $45. Then it's not about try to do, after all, if you want to go through the 58, but it depends on you. Well, that's it. That's just the revision that we made because we had too many news coming from the financial sector. But then tomorrow morning we can be together again with the opening bell, and then Traders on the Squawk. So that's it. That's all for today. So my best wishes to you. And this is Traders on the Squawk. Yeah, this is Markets Radio. That's it. A big hug to all of you. Hope to see you soon. Bye-bye.
Markets Radio is sponsored by Cream Live Trading.
On Markets Radio, this is Traders on the Squawk.